Good afternoon. Let's do some business. We are doing it live right here, doing more at 4 weekday afternoons. We get right down to business with the news-driven hour right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com and your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Well, stocks wrapping up the week lower today after kissing record highs, taking in the big enchilada of monthly economic reports, and that is the monthly jobs report we got from the Labor Department today, coming in stronger than expected today, and that spurred a jump in the benchmark Treasury yields. The Dow coming in for a closing loss of 87 points. The S&P 500 slipped 6, and the NASDAQ gave back 40 points. The S&P 500 is now just 0.1% below the record close we set on June 5th. For the week, the Dow managed to eke out a closing gain of 0.3% for the week. The S&P 500 racked up a 1.3% weekly gain, while the NASDAQ advanced 2.4% for the week. On that big enchilada, the monthly jobs report, we saw 272,000 jobs added, and the unemployment rate ticking higher to 4%. In the month of May, the job market likely still running a bit too hot for the Fed to cut interest rates. Market taking all that in. The markets, of course, keeping a close watch on these readings. The May jobs report bearing bad news for home buyers, as reports of a stronger than expected economy will likely keep mortgage rates at status quo. According to the National Association of Realtors, that better than expected jobs report indicates the economy still running a bit hotter than the Fed wants it, and the market is expecting the Fed now to hold back on cutting rates. I'll discuss all that coming up later this hour with Jeff Lazerson, the president of MortgageGrader.com. According to the chief economist at the National Association of Realtors, with Wall Street expecting a further delay in the Fed's interest rate cut, Lawrence Yun said the mortgage rate looks to be stuck at near 7% average for at least another month. The average 30-year fix now averaging 6.99% as of the latest survey from mortgage giant Freddie Mac. Well, it looks like the commercial, some of the regional banks are back in focus, along with commercial real estate. Moody's placing the long-term debt ratings of Old National Bank Corp and several other regional banks on review for downgrade amid concerns over commercial real estate exposure. Here we go again. Moody's publishing separate statements for all the banks affected. And looks like the rationale for this downgrade of various banks was the same for all those lenders, as a regional bank with a substantial concentration in commercial real estate loans faces ongoing asset quality and profitability pressures as higher for longer interest rates heighten the longstanding risk of commercial real estate for banks' credit worthiness, especially during cycle downturns, according to the statement from Moody's. Hedge fund manager Scott Bessent, viewed as in the running to become Treasury Secretary in a second President Trump administration, is offering a 3-point economic agenda, with his proposal coming out as he spoke at a conference run by the Manhattan Institute, a conservative think tank. The think tank's president asking Bessent that what he would suggest to the presumptive 2024 Republican presidential nominee Donald Trump as 3 arrows for a successful presidency, and gave an answer. We'll take a closer look at that later this hour. NVIDIA back in the spotlight today. Shares, of course, have been seeing a record run-up, pulling back slightly today ahead of the company's 10-for-1 stock split. And that, of course, will start trading on Monday. NVIDIA's stock momentum likely reflecting a number of factors, including the company's upbeat earnings we got recently and continued rotation into chip names we've seen and has been noted on this program. Here in Los Angeles, LA County supervisors voting in favor of exploring efforts making reparations to African Americans in the county, including offering free admission for a day to local attractions, including the Natural History Museum and County Museum of Art. Critics say this latest vote by the supervisors simply looking for ways to unlawfully discriminate against Angelenos based on their race and ancestry. I'll talk about that with Andrew QUINIO, the attorney at the Pacific Legal Foundation, who's following that case. But first, on your money, the markets, and the economy. Joining us live now, AXEL MERK, President and Chief Investment Officer at MERK Investments, which includes the VanEck MERK Gold Trust. The symbol in that one is OUNZ. AXEL MERK, thank you very much for taking the call here on a day where gold has pulled back, and you've been following all the big news today on the markets and the economy. Good afternoon, and thanks so much for coming to the line today.
Happy Friday, and you didn't even mention GameStop.
I didn't. We'll get to those meme names a little bit later if you'd like to talk about that, but plenty to unpack here to wrap up the week. We did hit records earlier in the week and got this big enchilada today. Give us your assessment of where we stand here at this point.
Well, clearly the market reacted to a stronger non-farm payrolls report. And let's keep in mind what this report is. This report is the first reading that we get on the jobs market. And I emphasize the word first because we have no idea how accurate that report is. To give you just some details on this, as part of the job report, there's always some modeling. And the modeling suggests that about 231,000 jobs were created based on models. It's called the birth-death model, businesses that go out of business that have been newly created. And in April, by the way, that number was 363,000. And so you got to wonder how accurate these models are, and the answer is nobody knows. And they get revised, these numbers, quite significantly. Now, I'm not suggesting that the economy is weak by any means. This is the best we got. Economists try very hard, and of course, we love to jump the gun in the markets, and then over time it gets adjusted. The relevant fact is that the number was strong enough so that the Federal Reserve is giving up on any idea of having a rate cut in September, maybe in November, more likely in December, if there is one to happen. But as you pointed out, this economy is too strong for rate cuts. And so, as you pointed out, the price of gold fell, and reflecting that the rates are going to be higher for longer, I suppose.
They are live with AXEL MERK, President and Chief Investment Officer at MERK Investments, author, by the way, of the book Sustainable Wealth. And it's wonderful to have you back with us here, AXEL. And certainly the way things have been going lately, bad news for the economy has been good news for the markets. But today with this latest jobs report, which you say certainly can be dissected and certainly is also drawing some skepticism here. What do you think is going to be the Fed's next move in the face of the latest cards that are now on the table?
Well, the Federal Reserve's problem is that they have taken away their own gauges ever since the financial crisis. And so they are reading the same tea leaves everybody else is reading. And so they see this as a strong report. They see that inflation hasn't come down much. They believe they're in a restrictive environment, although that's not so clear with these numbers being as strong as they are. And so all we know is that Fed Chair Powell has a bias towards easing, but the actual excuse to be able to ease isn't coming. And it's not coming because this economy is a little stronger. Now, the unemployment rate ticked up by 0.1% to 4%. But the labor participation rate amongst women in particular is a record high in the so-called prime age rate. Men's rates also have ticked higher. And so those are not recession indicators. Now, some other economic indicators are more mixed, but clearly this is not an quote-unquote excuse to lower rates, and that's what the Federal Reserve is looking for. They're looking for an excuse to lower rates. The market is not giving it to them, or the economic data anyway. And one of these days we'll get a weaker number again, but the Federal Reserve will need to see 2 or 3 of weaker numbers before they can say there's a trend.
Very interesting. And we're speaking on a day in which the price of gold was down, about 3% today to around 2,311 at last check. Silver also pulling back here by more than $2 at 29 and change. Let's talk about gold and precious metals here. What's your outlook on gold given these latest ratings here?
Yes, gold is, of course, still up over 10% for the year and has had an amazing run. It's still over 20. Well, it's just under 2,300 in the spot market. And it's a reflection, I call it a direct reflection of the mania of policymakers on the Federal Reserve, because it is very interest rate sensitive. And so, of course, with the repricing, it's gotten lower. There were also some rumors out this morning that the Chinese were buying a little bit less gold. We'll have to see about that. And, of course, foreign central banks have been key drivers of the price higher as they had been adding to their reserves. And so we continue to see a broad range of buyers, the diversification buyer, and notably also the buyer that's concerned about the purchasing power of the dollar. But of course, nothing goes up in a straight line, and volatility in the price of gold, in my view, is healthy because it shakes out the weaker players and allows for more sustained longer-term rallies. Incidentally, in the physical gold ETFs, of late there have been some inflows in the U.S. Until recently, there had been physical buying in the U.S., but most of the buying had taken place abroad with both central banks. Chinese retail investors, by the way, have been buyers as well, but also other central banks. The Polish central bank just announced that bought about 5 tons year to date. And so there is a global demand, but of course it doesn't mean the price always goes up. I tend to look at price of gold more in the long run, and in the long run, I have little doubt that our government is going to spend a lot of money, and that the path of least resistance is that the inflation is not going to go down sharply anytime soon. But of course, when economic numbers are stronger than expected, there's a perception of a central bank being tighter, and for the moment it is, and that's weak for the price of gold.
And while inflation's still running hot here in the U.S., how's it looking in Europe these days? We did see the European Central Bank cut interest rates for the first time since 2019. Might that have also impacted the price of gold here with what the Europeans did this week?
Yes, the European Central Bank cut interest rates by 0.25%, and incidentally, at the same time, the inflation outlook was revised higher by the ECB. That seemed a bit paradoxical. ECB President Lagarde said the reason why they were able to do that is because all this wage pressure that has been coming is not going to extend any further. And what they argued is that in Europe and Germany in particular, the wage deals are done every 3 years. They had these rounds complete. They were based on the inflation of the previous 3 years, and therefore inflation will go down. And then she emphasized because their forecasting is so good, they can lower rates. And I say that with a bit of sarcasm because I think, as we all remember, the forecasting when inflation was low, they completely missed the boat, just like other central banks, on it moving higher. But they specifically mentioned their ability to be good at forecasting as one reason why they were able to cut rates at this stage.
Very interesting. And, of course, you also follow the currencies very closely. For those traveling to Europe, looks like the dollar now at 108 versus the euro here, right? The British pound sterling at 127 against the Japanese yen. We're at 156.65, it looks like. And then the Mexican peso, which took a hit following the election south of the border, now at 1841 versus the dollar. What do you see ahead on the currency front?
Well, versus a major currency like the euro has been surprisingly strong given that we've had a rate cut. And indeed, until this morning, before the jobs report, the euro was just over 109. And I was thinking it could easily go to 110 one of these days. There's a setback to that rally, obviously, with the economic numbers being stronger in the U.S. Mexico is a different story. We obviously had an election. We have a one-party government coming up, and a government that has been winning votes by giving a lot of social benefits. Now, if you add that up on the economic side, that's expensive and inflationary. And so that is one of the reasons why the Mexican peso has been weakening. And of course, the Mexican peso in recent years have had a stunning rise. And so it's not too surprising that it gives some of that up.
Very interesting. We're on there live with AXEL MERK. And AXEL, let me ask you this. Since the dawn of the crypto era, we've, of course, have been on the air following how all this is playing out and been asking when they were called primarily cryptocurrencies. I remember speaking to you in the context of currencies. But as things have evolved now with Bitcoin and all these other coins out there, give us your assessment of the crypto space. And also, you think money's flowing out of cryptos and into gold or vice versa? And give us your assessment of what you see happening there.
Well, when I said earlier that there's a broad range of buyers in gold, the one buyer that's missing is the speculator. And they love a good trend. They love volatility. And so those buyers tend to chase the meme stocks or invest in the digital assets because the volatility is just, most of the time anyway, is substantially higher. So in that sense, yes, there is some competition, but not all that much. Obviously, especially Bitcoin now has exchange-traded products available. Those have seen significant inflows, and some of that may well continue as institutions take longer to embrace these products. That said, digital assets continue to be, the incarnations of those products that we have these days continue to be highly speculative vehicles, of course, and I think the high valuation of them is a reflection that the Federal Reserve has not been as tight as they want to believe. We have the meme stocks do well, we have cryptocurrencies do well, we have lots of things happening in the markets that don't suggest to me that we are near some depressed levels, quite the opposite. And so I can't give a forecast of what these digital assets will do, but they are, of course, a barometer of how motivated speculators are to be in this market.
All right, and speaking of speculators, as you properly noted, GameStop down more than $18 today to 28 and change, a drop of nearly 40% here, and after hours moving even lower. What's your view of this, the mania that we've seen recently with these names that have popped up again?
Yes, well, again, I can't give any investment advice on these things, but they are a sign that we are not at the bottom of a bear market. Let's just put it this way. When one person can have an immense influence in the stock market, and Move Stocks have a YouTube channel where he had, I think, over 650,000 visitors when he gave a 45-minute ramble about that he's investing in the stock. What's his name? The Roaring Kitty. And
yeah.
and so we'll have to see. It's a phenomenon, right? And a phenomenon like this don't exist when you're in a depressed market. And you have very tight monetary environment.
Right. Remember, it's not the first time we've seen a situation with this, but certainly with social media prevalent, first time really we've seen it this big in this era. But remember Joe Granville, the newsletter writer who moved markets back many years ago, and that was big news of whatever he said. Very interesting. Any specific places here, AXEL MERK, where you are putting money now and or taking it off the table?
No, I try not to do too much right now. Mostly, I don't like these valuations. You just mentioned the meme stocks. We obviously have the so-called MERK 7, and notably one of them has been going through the roof, right? And those are times when I like to get a little bit more cautious. Obviously, when Greenspan gave his irrational exuberance speech in 1996, it still took over 3 years for the market to reach a peak. So who knows when that is? But I tend to get nervous when you have a CEO of a company sign the breast of a woman to, I don't know whether you probably can't show that on radio, as a sign that the stock might be a bit on the pricey side. Those are not, again, signs that we are in the bottom of a bear market. And so you asked me about gold earlier. Gold tends to be a diversifier when times are rough. And because times are good, I'd rather have some gold, because when times are good, things can change.
Terrific, AXEL. Well, thank you so much for taking the call here to wrap up a very interesting week and indeed a record-shattering week. AXEL MERK, President and Chief Investment Officer at MERK Investments, which includes the Van Eck MERK Gold Trust, which is the ticker symbol of that one is OUNZ. He's also the author of Sustainable Wealth. AXEL, it's always great to have you with us. Thank you very much for taking the call here this afternoon.
Have a good one. Thank you.
Thanks very much. And right out to the freeways now, heading into the weekend here on 790 KABC. Friends, people like you and me have our ear to the ground on all things business. We like to be informed and indeed well prepared. As important as finance is, I want you to have a plan in case you're hit by someone not paying attention to the road. Thinking ahead serves us well, and even still, we can get caught off guard as people are so focused on their destination that they might not have a plan if they're in an accident. That's not their fault. That's why I encourage you to put my friend, Attorney Clark Fielding's number in your phone. That number is 833-88-SHARK. So if you're in an accident, you'll be ready with your strategy to make Clark Fielding your very first call. Fielding Law aims for the highest possible settlements, considering you might need long-term care, rehab, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit and run, boating, or bike accidents, you name it. The number to call, 833-88-SHARK. That's 833-88-SHARK. Or go to clarkthesharklaw.com. 790 KBC welcomes Yachtly Crew, the nation's #1 yacht rock band, coming to the Bank of America Performing Arts Center November 9th. Tickets are on sale today at Ticketmaster.com. Right now, caller 9 wins at 1-888-795-2222. You can get a pair of tickets to the show if you're caller 9. Those tickets furnished by Niederlander Concerts. Caller number 9 wins, 1-888-795-2222. Mottek On Money continues here, live on 790 KBC. The stock market pulling back today after making a run for new heights in reaction to the jobs report, which came out first thing this morning. Market took it as better than expected, with 272,000 jobs added and a 4% unemployment rate for the month of May. That did tick higher compared to the previous month. And the market taking this in as these numbers still running a bit too hot for the Fed to cut interest rates anytime soon. Ultimately, the market turned lower at the close. The Dow closed down 87 points, ending the week at 38,799. The S&P 500 slipped 6, and the Nasdaq down 40 points. The yield in the 10-year note now at 4.44%. NVIDIA down $1.10 today at $1,208.88 a share. The stock is undergoing a 10-for-1 stock split. It'll start trading on that split-adjusted basis on Monday. Apple shares moving higher today, at or near a record highs of more than $2 to $196 and change. Gold pulling back, as previously noted, down about $80 at $2,311.10 an ounce. Silver down more than $2 at $29.27 an ounce. Crude oil down 17 cents at $75.38 a barrel. Checking the cryptos now, we see Bitcoin up about $130 at $69,400. Ethereum down slightly, down less than $1 now at $3,690, and Doge slipping now to 15 cents. Now the latest news for you here on 790 KBC. Mottek On Money continues here, 790 KBC. Turning now to real estate. Looks like that May jobs report today has the market thinking the Fed will keep rates higher for longer, and that'll also impact mortgage rates. We've seen some pretty wild moves in the bond market lately, mostly lower. In fact, we saw mortgage rates actually tick a bit lower this week, according to the latest survey from mortgage giant Freddie Mac, just below 7% now for the average 30-year fix. Let's bring in our mortgage expert, Jeff LAZERSON, the president of MortgageGrader.com, also Orange County Register real estate columnist. Jeff, great to have you with us here this afternoon.
Thanks, Frank. Good to be talking to you.
Yes, indeed. It's always great to have you with us live here to get a laser focus on what's happening in the mortgage business as well as in real estate. How are the rates looking here, first of all?
Locally, rates are a little bit better than the Freddie Mac 6.99 rate that was announced this week. Southern California, we price a little bit better because the loan amounts are on average larger than they are nationally. So Fannie Mae up to $766,550. The 30-year fix is at 6 3/8% at one point. The 15-year fix is at 5 3/4% at one point. And then the high balance, so that is $766,551 to $1,149,825, and that's in LA and Orange County, not the Inland Empire. The 15-year high balance is at 6 1/8% at one point, and the 6 3/4% at one point for the 30-year. And jumbos are about 7%.
All right. Where do you see the rates go from here, Jeff?
Oh boy, Frank. I thought they were on their way down, but the news that has been coming out lately doesn't seem so. So I guess it's going to be just sort of slow and steady in this high 6, low 7 range, and it doesn't seem to be affecting buyers out there. I mean, you have listings are still really light compared to historical times. but there's so many cash buyers out there that don't even need a loan, so that doesn't matter. And then a lot of the buyers out there, with the down payment money, their folks are helping them out either with money or with co-signing or buying it for them. And just because there's such a light inventory and such fierce competition, these high rates don't seem to be having any effect, and prices just keep going up.
It looks like the median sale price of a home nationwide, by the way, $392,200 at the start of June. That is an all-time high nationally, according to Redfin with their survey out this week. And we did see the CoreLogic S&P Case-Shiller 20-City Home Price Index, which showed L.A. home prices moving higher despite the higher than normal, I guess you could say, mortgage rates we've seen in the last couple of years, Jeff. So at some point, will those higher rates have an impact on prices? What do you see ahead on the price front?
Oh, we did see a couple of weeks ago when rates went over 7%. There was a little bit of a hiatus or a little bit of a slowdown, but it seemed to pick right back up again. And so, Frank, the economy in general is still really strong. There's a lot of wealth transfer in families now with inheritance and things like that, and so I'm just getting this impression that borrowing money doesn't even matter that much because of the number of all cash buyers out there and the investors out there that are able to pay all cash, and the hedge funds. So I would say in order to have a bad impact, you'd probably have to see rates at 7.5 or 8%. And in order to have a good impact, I'd say you're going to need to see rates under 6%. And then, of course, as the affordability improves with a lower interest rate, the prices are going to go up because of that. So it's a real no-win situation. And I would tell anybody that wants to buy, if you can afford it at all, just get in, because I just don't see this market changing. I mean, it's just going to take something very dramatic out of left field to change this. Otherwise, it's going to just keep going the way it is. And I know renting is no picnic. Rents are expensive and it's hard to save money. And so if you can afford to buy something or afford soon within the next few years, buy it. If not, you need to think about moving out of Dodge and going somewhere else in the country where things are more affordable. I mean, I've told a lot of people that, and a lot more people are doing it. Not on my advice; they're just doing it. Period.
When you say get out of Dodge, that's it. They're out of here. Now, Jeff, let me ask you this: affordability, of course, is also a consideration when it comes to these homeowner association dues and so forth, where people in condos have to pay this with higher insurance rates and additional assessments happening because of insurance and other things. What about that, and what are you hearing about that? Are you seeing that being a factor in home condo buying decisions?
Oh, the condo situation's horrible right now. The last 2 loans I did on condos were short of a nightmare, just to deal with all the association charges and the like you say, the insurance fees. Yeah, the assessments. I had one association charge just for the package of documents we needed over $1,000. Just not forget the loan, just to get the information we needed. It was like highway robbery. And then the insurance thing, of course, Fannie and Freddie want 100% replacement coverage, and it's very difficult now for condos to get the replacement coverage. So a lot of them are going short, or they're charging these horrendous assessments against all the homeowners, several $100s or thousands of dollars for that matter. And so I would be very, very, very leery of condos. In fact, I just wrote about it for this weekend's paper about how you should really check the budget on the condos and check the reserves and look around the complex. If it looks like it has a lot of deferred maintenance, I wouldn't buy in there, because if you haven't seen the bill for it yet, you're gonna. There's a law by January 1st of next year, the California balcony laws kicking in. They have to have these apartments and condos inspected. Anything with wood, like staircases and balconies, And that's what Fannie and Freddie are looking at, those inspection reports too. So deferred maintenance, and if it's not being taken care of, they don't get a Fannie Mae loan. And if you don't get a Fannie Mae loan, if it's called a non-warrantable condo loan, if Fannie or Freddie won't do it, you're talking about rates 1.5% to 2% higher. So be very, very careful when you're looking at buying a condo right now.
Excellent, Jeff. Well, thank you very much for taking the call. We'll look for your column in the paper this weekend in the Orange County Register and the other papers part of the Southern California News Group. That is Jeff LAZERSON, the president of MortgageGrader.com and OC Register real estate columnist. Jeff, thank you very much for coming to the line this afternoon.
Thanks, Frank. Good to talk to you.
Likewise. Thank you very much, Jeff. And right out to the freeways we go now, 790 KABC. Mottek On Money continues here in 790 KABC. The Los Angeles County Board of Supervisors voting this week to explore additional efforts for making reparations to black residents of the county, including an offer of free admission for a day this month to attractions such as the Natural History Museum and County Museum of Art. The Daily News reports the board approved a motion introduced by Supervisor Holly Mitchell directing the county CEO and the Director of Racial Equity for the Anti-Racism, Diversity, and Inclusion Initiative to review a report of the California Task Force to study and develop reparation proposals for African Americans and report back to the board in 120 days with recommendations for local reparation efforts. Joining us live now is attorney Andrew QUINIO, attorney at the Pacific Legal Foundation. Andrew QUINIO, thank you very much for taking the call. I know you've been following this issue here. Give us your reaction to this latest move by the Los Angeles County Supervisors.
Yeah, Frank, and thanks so much for having me. What the LA County Board of Supervisors is simply doing is finding ways to discriminate against Angelenos who are not African American or descendants of enslaved persons. They're essentially directing the Executive Director of Racial Equity to come up with ways to violate both the state and California constitutions. Anytime the government, whether it is the state, the federal government, in this case a county, treats individuals differently based on immutable characteristics like race, like ancestry, then they are subject to strict scrutiny. They can only do this to remedy specific instances of past discrimination, or as the Supreme Court has also said, to quell prison riots, which is not what's going on here. And keep in mind the individuals who are benefiting from this and being disadvantaged by this are the individuals who themselves had nothing to do with slavery or themselves were not enslaved. It's the descendants of those individuals, and it's confounding for a place like Los Angeles that's so diverse, where you have over 1 in 3 individuals in LA are immigrants. Over 33% of the population is made up of Hispanics and Latinos. And so the County Board of Supervisors will be asking these individuals who have no connection or ancestry to slavery or committing slavery, that they have to bear responsibility for this historic injustice through various ways, whether it's not being able to have free admission to museums and beaches and harbors, to having the ability to get grants and loans or housing assistance among some of the recommendations that the county is seeking.
On the live with attorney Andrew QUINIO, attorney at the Pacific Legal Foundation. The supervisor who brought this up said, in her words, with our history of legalized racism, including but not limited to redlining, housing discrimination, workforce discrimination, and school segregation, our current government, she said, needs to act just as resolutely to provide true reparations to historically disenfranchised black county residents. I know you've been following this issue. I know they've been talking about reparations in Sacramento as well. Where does that stand at this point?
Sacramento has gone quite far through in its legislative session with pushing through reparations proposals. Several bills have already made it through the Senate, and a few bills have made it through the Assembly, and they could be on their way to the governor's desk to sign. Among them is AB 2862, a licensing bill that prioritizes African Americans for the issuance and receipt of professional and occupational licenses. There's SB 1050 that would allow individuals to be compensated for property taken through discriminatory means, eminent domain through discriminatory means. There's the establishment of the California Freedmen's Association that will implement all of these reparations programs. The establishment of the Fund for Reparations that was also passed. So a lot of these proposals are making their way to the governor, and I wouldn't be surprised if we saw one or several of them get passed. So that's something to look out for in September and see what the governor does. And the governor has already signaled that he's not in favor of direct cash payments in the form of reparations, or rather he's less favorable of that. So we'll see if these current proposals conform with what he's thinking of as far as compensation.
All this at a time when the state budget is negative, right? So it'll be interesting to see how that plays out from a legal standpoint. Is all of this facing legal challenge now? I think, as you note, the U.S. and California constitutions prohibit Los Angeles County, for example, from preferring and disadvantage individuals based on race and ancestry. So where do you think this will go from a legal standpoint?
I think you will inevitably see some legal challenges to this legislation. And if LA comes out with their recommendations and makes those law, then you'll definitely see some challenges there. Evanston, Illinois, which has served as an example and a precursor to a lot of these other reparations programs across the country, is itself facing a lawsuit for their housing reparations program. So really it was only a matter of time before some folks stood up and said, you can't treat us differently because we are not the right race. And I imagine you'll have a lot of Angelenos who would do the same thing and take legal action if they're not benefiting from housing benefits or grants and loans and other sorts of government assistance because they have the wrong skin color.
Andrew, thanks for taking this call today on this important issue. Andrew QUINIO, attorney at the Pacific Legal Foundation. Thank you very much for joining us live here on Mottek On Money on 790 KBC.
Thanks so much, Frank.
Thank you. And recapping the action on Wall Street today to wrap up the week, the Dow coming in for a closing loss of 87 points at 38,799. The S&P 500, which hit a record high this week, pulling back 6 at 5,347. And the NASDAQ also pulling back from its recent high, down 40 points at 17,133. The yield in the 10-year note at 4.44%. That's the one that impacts the fixed-rate mortgage rates, which actually ticked a bit lower this week. NVIDIA in the spotlight, 10-for-1 stock split after today, down $1.10 to $1,208.88 a share. Apple, a big winner today at more than $2 to $196.89, at or near its all-time high. The price of gold taking a tumble today, down nearly $80 at $2,311 and change. Silver down more than $2 at $29.27. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 Monday for you right here on Mottek On Money, 790 KBC.
For the real story behind some of wrestling's biggest moments, it's Something to Wrestle with Bruce Pritchard and Conrad Thompson, too.
We got to talk about the crowd in France.
At one point, they sent out an emergency to everyone's phones stating that the decibel level was dangerously high. A few surprises, like singing Randy Orton's song. I was like, there are words to this song?
Something to Wrestle, wherever you listen.